Happy Saturday, JT, TickerMonkey.com here. Let's take a look at the Qs and the SPY, and let's just take a look at what happened this week. So we're looking at the QQQ here. And now the conversation today is we want to address the oops reversal, how you can trade that, and how that came about yesterday on Friday. Really great thing that I like to use, so we'll dig into that. But first, we'll frame this up. We're looking at some of our combinations. These are candle combinations we use heavily at TickerMonkey, and what we had here on the QQQ at the all-time high is you had this wick set up, and it was successful that day. Next day, a little bit of stalling, gap down inside day, but then Wednesday, Jerome came to town, cut the rates 25 basis points, signaled that they may not be cutting that much. Everything has to reprice. The dollar goes up, the VIX goes up, 10-year rates go up. Just complete repricing in the bond market. A friend of mine that's a municipal bond trader on a desk talked to me about liquidity dried up there. So you get this complete repricing, everything going on, and we get our 3-bar breakdown. So big 3-bar breakdown. So when you get one of these, the first thing you want to do, if there's no gap, all you want to do is take the high and the low of this day, add them together, divide it by 2. That gives you this midpoint. So on the QQQ, that midpoint is 525.945. Okay? You'll notice on Friday, it rallied up to 524.82. So what you do with that is that midpoint becomes either resistance, which can signal that expansion, because that's what this is, it's an expansion in price to the downside. It may consolidate, jive around a little bit, but you want to watch that midpoint because it's going to give you clues. So we got a clue there on Friday that even though we had this tremendous oops reversal and ripped back up to the tune of 169% ATR to the high of the day and closed almost a full ATR, and this was great, but you got to watch that. Now, when you start to close above that midpoint, that's a great sign. And that's where momentum back to the upside, back towards that high, can come into play. So, the premise of today, though, we want to talk about this oops reversal that happened. So, Thursday, not so great because after this drubbing on Wednesday, we gapped up, and that's just not what you want. Yeah, we had a very low reading on the NAMO, and that was good, but you gap up and that's not what you want. After big washes like this, you want a gap down to then trade back up. So we didn't get it on Thursday, and that's okay, but we got the gap down, and I prefer the gap down to be a gap down that is outside of the range that frames up the oops reversal. Because remember, the oops reversals happen when you're gapping above or below the prior day's high or low. So big break, faded a gap up. Here we are Friday morning, we're gapping down. So how do we trade this? So the QQQ, I'm already looking at the core 7 names. I have those over on a screen to my left, and I'm watching those. In these situations when you're gapping down like this, you want to watch to see, can the selling get progress to the downside? If not, that's a clue. So this is a 3-minute chart. That's what I use, and I use 13-minute over monitoring the core 7. But right here, you can see I've got a script that marks off my opening range. So first 3-minute bar, opening range is notched. You do start to get this break higher. Now I took a futures trade right in here and ended up trimming it down, trailing a stop, and those last contracts got stopped out on the NQ. But here on the QQQ, you can see it comes back in, gets back into the range, actually washes the opening range low. Okay, now this was a big key tell right here because that selling could not progress any further. Even though you undercut the opening range low, it couldn't progress. And then these two candles back to back, chopsticks, mirror image, reversal. This was actually a little 3-minute open equals high situation. You took that out, you checked back, flipped the opening range high into support, and now you're taking back VWAP, and you're starting to work into that potential oops reversal. So we'll flip it back over to the daily. Now, where is that? That oops reversal pivot is the prior day's low. So for the Qs, 513.83, that low, that's the pivot to where that oops reversal can trigger. We'll go back in and we'll just take a look. And now I bought my QQQ long position. I've been riding this thing for a couple of years. I got my first B1 back on October 13th of 2022, and it was on a capitulation, gap down, oops reversal after a long bear market. This is not comparable to that, but the mechanics of the trade are similar. And you can kind of see that let's see, 513.83. It was right in here. This is where this oops triggered at 9:18 a.m. Central Time. It took a little longer than usual. That one back from October of 2022, I think it happened really quick, like in the first 13 minutes or, the first half hour. This took a little bit longer, and then it turned into a trend day. Really great. You get up here, you have this flag consolidation, you start pushing for more. Like I said, this thing ended up pushing 169% ATR from the open on Friday. Really great move. Now, are we out of the woods? Probably not, because you've got resistance at this midpoint. It's a real key thing. But for trading purposes, this was a textbook oops reversal setup. Yeah, it happened above the 50-day, all that stuff. Doesn't really matter. I'm looking at the mechanics of the opening range. Can this gap down push lower? It couldn't. You're looking at the core 7 names. They weren't pushing lower. There was a bit of a delayed reaction for the oops to come on. It took a little bit longer, but it came on. Now, and you can see, like, if you go back just before I jump to the SPY, we'll wrap this one up. But you can kind of see how you can frame that up very easily. When this took back that opening range low and you closed here, you know exactly where you can put a stop. And that's 2 points on this thing that you could have put to frame that up. You could have framed it up against VWAP. Many ways to go about it. I like to use that opening range low, especially when it was coming back up through. Just the dynamic of it took back the low, same bar, it's pressing through the high and closing. That right there, this candle was a clear sign to get after it. So that's the QQQ. The SPY, similar thing. We'll take a look at that. Now, this was a little bit different structure because it was flat for so long, and you had some little warnings. You had this little micro 3-bar break here, and then, of course, Jerome came to town and repriced everything. So you do the same thing here with the SPY on that 3-bar break, and this one was a little different expansion-wise. So if we just widen this out, look at 6 months, you can see the biggest volume last time was on this gap down washout. Now, this wasn't an oops reversal situation that day. It didn't come back up that high. It's a little bit more delayed, but that August 5th, that yen carry trade that unwound, this was the biggest volume of this uptrend until this 3-bar break on Wednesday. So, second highest volume of this move, range expansion. We'll have to see how this plays out, but we're going to do the same thing that we always do with every 3-bar break. Even on the upside, when you get 3-bar breaks to the upside, you can do this and watch that level for support. Great for pullbacks in that situation. But on the downside here, we're going to take the high, take the low of this bar, add them together, divide by 2, and in the case of the SPY, 596.15. That's where this midpoint is for it, right in here. What was the high on Friday? 595.75. So you got back up into there. That was a 206% ATR move from the open on Friday. Ended up settling with 138% ATR move. Really great. Right there under the 50-day. All these moving averages, they're lagging. So you really want to bust down the dynamics of the candle and the price action and find those price points, because those price points, there's no moving average around there, but you can kind of see what happens when you get there. Same deal though. You had that same gap up. Not an ideal situation. Now, I will say, we've already moved on from the Qs, but the NAMO, NAMO, dollar sign in front of it. That's the NASDAQ McClellan oscillator. For this one, it's NYSE or whatever you use for the S&P. But it got down to a very low reading. The NAMO was, I think it was minus 83.5 on the open on Friday. That's a great sign when you're gapping down. That's an extreme. That lined up with all those other instances, especially the October 2022 one I'm talking about, but all these other prior instances when I get these really good trades, like, August 5th had a very low reading that morning too. And you get these washout type readings, and then to watch very closely to see, can this thing progress lower, or are we going to start to turn? So you can kind of see, you've got the context there. So we get the gap down, and then we'll just take a look here at same deal, 3-minute SPY. We'll widen it out a little bit so we can see. But you can see there's your opening range, first 3 minutes, same deal, got to push up out, but came back in. Minimal undercut. It actually closed. Let's see, what was the opening range low? 581.15. The close on this bar was 581.22. You have to pay attention to this stuff. A lot of people just get lost in the sauce and don't pay attention to the price levels. Price is everything. So you can see, next bar, same deal. Taking back the opening range low, straight up through the opening range high. Again, this is a small, tight range. Usually, you might get a bigger range, but it's this failure to push lower that stands out. Flip the opening range high to support, VWAP, all of the things. The oops reversal pivot on SPY was 585.85. So where is that? That is right in here. This bar right here. So 9:24 a.m. Central Time. So 6 minutes after the Qs went oops, SPY went oops. And then look right here on this 3-minute. You had our combination of the wick setup and an open equals low candle. Do you know how hard it is to get an open equals low on these monstrously liquid type names? So that is a demand dynamic that is screaming right there as this oops reversal happens, and then it starts to jam higher. Same deal as the Qs, flags off. This is what you see on trend days. You get this big jam higher, you start to consolidate, you push again, and then you have basically tight consolidation for hours, maybe a pullback. But since this was a Friday going into the weekend, all that, you had more profit taking that happened, or else on a normal trend day, you would have seen this consolidate fairly tightly, have that one shakeout type thing, and then trade back up and close at or near the high of the day, or even make a new high in some instances. But it was a triple witching. You're having to reprice everything from FOMC decisions, and you get selling into the weekend. So that's where we're at. So the midpoints on the SPY and the Q from this 3-bar break, they are still very important levels, potential resistance, because you do have this range expansion, and it was to the downside. This was a forceful day on Friday, great volume, all of that. We need to get back up through the midpoint of that range expansion area. So that is the takeaway on that. And I will give one example, because it's not always just as clean as adding the high and the low when you're doing those 3-bar breaks. APP comes to mind on its 3-bar break that it had the other week when they didn't get added to the S&P 500, gap down. I almost got put a lot of shares on this, but it worked out. Lessons were learned. But when you get one like this that gaps, to get the 3-bar break on this situation, a little bit different. You want to, when you're gapping, it's almost like when you do the pink rally day. That's an IBD thing. But when it gaps, you have to account for the gap. So since this one gapped, you want to account for the close of the prior day. So the close of that prior day before it gapped was 401.50. So you want to do the 401.50 there, and then you want to add that to the low of the day, of the gap down. So that was 332.35, and then just divide them by 2. So you can see 366.925 on APP is the midpoint on that. So that 366 area. And you can kind of see the next day it came up and rallied 360. So you didn't get there. So even when you're getting these undercuts and reclaims of the 21 EMA, this is a lagging measurement at this point. You're going to need a lot of force to repair this. And the best indication is getting back up through that 366.92.5 level. And you want to do that on all of those names that had those 3-bar breaks recently this week. So you do that for everything. Now, there are names standing out that are showing relative strength and continuing. I didn't do anything with my Reddit. I didn't do anything with my A-Lab. I did nothing with my Tesla, So we'll see. I sold some puts short and collected some premium on those. Didn't get added into any stock. Didn't get put my way. But anyway, I'll wrap this up because I will ramble. But I did want to make the point of the oops reversal in context. So you really do want that sharp, hard selling, panic, and then those are the best oops reversals. You'll get little oops reversals along the way on all kinds of different things, actually. Let's see. I mean, these are little, like that's a little oops reversal on the Qs back on November 11th. And it did see this little micro 3-bar break, and you gap down, but then you recover back up. But this is the hardest 3-bar break that we've seen in a while. And it had implications across all markets. So bond markets, currency markets, all that stuff. You just have to reprice the risk and see what's going on. But As always, it's where is it versus what you paid for it, whatever you own. That's all that really matters. What's your cushion? Can you hold if it's going to base again? Um, if not, you might need to take profits. These are just constant considerations all the time. I see folks talk about different things with risk and all that. These are just primary principles. Like, I don't know, maybe they need to be explained, but you don't buy anything unless you know what your stop is. You continue riding your winning positions because you're constantly looking at what you paid for it versus where it's at. And if you have yourself a situation where you have a bunch of winners and you don't know which ones to sell, well, then the best thing that I've always done is you sort your winners by percent gain. So now you can see all of your winners. This one's up 200%, this one's up 100, this one's up 50, this one's up 35, this one's up 20, this one's up 10. Okay. So you may think that that 10% is the one that you sell. Well, with that sort, you also want to see how long have I had each one of those positions? Because the one that's up 10%, you may have just bought it today. And that's a really good sign that it shot up 10% in a day. So you may want to hold off on that. But the one that is up 20%, maybe you've been holding that for 12 weeks. Okay, that's a long time for a 20% gain. That's not special. That may be the one that you trim off, take those profits, because if and when the market does start to correct, the names that we traffic in, these growth stocks, they're going to go 2 to 4 times what the market's doing. So you have to have cushion if you're going to try to hold through that. And you may have one, two, three, you may have a bunch of really good names that are first, second stage bases that are really starting to push out, and you're getting this big cushion. You want to protect those. And the way you protect them is selling off your least special names. And, you know, sometimes it's pretty easy. You may have one that's only got a few percent and it's easy. But when you have a bunch of winners that you've had for a bit, then you do have to kind of sort by percent gain and then time. And then start to really look like, okay, that one's 20%. I've had it for 12 weeks. That's not special. So I'll take the gain on that. That helps me defend my Reddit position or my A lab or my Tesla and go about it that way. But anyway, all right, I am rambling. I'll wrap it. Hope you get something out of this. Let me know, and I'll see you on another one of these. Thank you.